What's going on, beautiful people? It's Joe, the Nomad Investor, where dividends freedom anywhere is the goal. And today I am back with another portfolio update. As of today, we are at 526 subscribers, 18 videos. And yeah, I'm currently filming the 19th video. So if you are new here, welcome, welcome, welcome. And make sure to smash that subscribe button because I'm going to be continuously documenting my journey. And for those who are already subscribers and watching again, welcome back. Thanks so much for tuning in. And yeah, let's get straight into things. Anyways, as usual, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, for those of you who are new, this is my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. So here it is. Basically, I have two sources of income as of right now. One is remote work income. It's pretty consistent, pretty stable, reoccurring. And then I have my business income, which that kind of fluctuates up and down depending on the seasonality of things. So I basically committed to investing $300 to over $1,000 per month in contributions towards my Robinhood taxable brokerage. And I'm treating my brokerage like a business, aiming for a minimum of 30% plus high yield annually. And the way that I'm going to achieve this is by investing into high yield income ETFs, such as WPAY, HOOW, QDTE, XDTE, XPay, BTCI, and etc. And I did have a max of 3 positions that I was currently focusing on for quite a while. And I'm alternating between anchors and satellite ETFs. But recently, I actually made the switch to doing around 5 maximum positions, and I'm just going to cap it at that. But I haven't decided which positions I'm going all in yet, or not all in, but going to add to my portfolio. And just for you guys know, the reason why I mentioned this anchors and satellite ETFs, this is following the core satellite investing strategy approach, which I actually learned from a guy by the name of Eugene Vasquez on YouTube. But it's been a tried and true strategy within the investment world for quite some time. And anyways, going back to this, I'm going to be taking the dividends that get distributed to me, paid out to me, and I'm going to be either reinvesting them weekly or monthly, depending on if their frequency of being paid out. And I'm going to drip them, or in my case, stack dividends to purchase when the market is down, like it was recently. And the portfolio growth strategy is drip plus always compounding. And basically, I'm going to be rinse and repeating this until my account hits $1,000 a month in dividend income. Now, disclaimer, none of this is financial advice. This is strictly for entertainment purposes only. And this is just me documenting my personal journey. Now, with that being said, we're going to hop into this real quick. If you are new here, you can pause this as I kind of go over this so you can see the income goals. But if you are old here, feel free to skip past this part. So these are my dividend income milestones while I'm growing my small portfolio. This is basically so I can celebrate the small wins leading up to the bigger goal along the way. So as you guys can see, I've already smashed my $100 a month goal, and I'm so close to hitting that $200 a month goal. We're definitely going to achieve it this upcoming or this next week. And who knows, maybe, just maybe, we'll get that third goal sooner than we think, right? But these are all the goals leading up to the $1,000 a month goal, okay? With that being said, here is the current state of affairs in the portfolio. So we are looking pretty good. We're at $4,066.56. I'm hoping that this continues to rally today. Obviously, today is Friday, October 24th, and this is pre-market, but we are looking good so far. So we had 5.46% yesterday in the market, and then pre-market so far we have $50.98 or 1.27% up. So if we do the math here real quick, it's 5.46 plus 1.27. That's 6.73% that we are doing. And as you guys can see, the buying power is the same. I'm at $1,070.74, and my margin buffer is currently sitting at 45.26%. And I'm $1,840.56 above my margin buffer. So my margin total, looks like it slightly increased a bit. It's $4,305.23. I obviously have $234.49 in margin used. And again, I haven't used $1,070 of that. But yeah, that's the current situation with the portfolio. And hopping into each of my positions just to break this down for you guys. So hopping into WPAY, it's currently $52.20 per share, which is below my average cost per share here. But it's looking like it's back on the recovery, at least for now. I don't want to speak too soon, too prematurely. But as you can see, our market value for this position is $3,709.30. Total return is negative 1.82% or negative $68.68. Like I mentioned, my average cost is below the current share price, but we are at $53.17 a share, and we have 71.059414 shares at a 50.81% portfolio diversity. And luckily, things are looking good on the margin ratio. We are still at 30%, so that's good to hear. Now, hopping into HOW, it's currently sitting at $70.50 a share, so it is above my average cost. We are at a market value of $2,185.90. Our total return is $70.51 for our total return, which is 3.33%. Our average cost per share is 68.23, and we are currently sitting at 31 shares, pretty much. And then our portfolio diversity is 29.94%. This has gained a little bit more because it's currently in the positive, unlike WPAY for now. And then, as you can see, our margin ratio is still looking okay at 30%. Hopping into NVDW, NVIDIA's single stock ETF from RoundHill, it's currently at $45.35. It's getting close to our average cost per share, but our market value is $1,405.85. We are down $2.44, which is 0.17%. And then our average cost is 45.43, and we are at 31 shares with a portfolio diversity of 19.26%. And again, the margin ratio for this is also 30%. So we are looking okay here, and we will probably continue to see that. Now, I really quickly wanted to hop into the investing journal. So for the investing journal, I did log this as of yesterday, October 23rd, 2025. It was finally a green day, and I put for now because who knows? We were sitting at $4,026.35. We have $7,255.90, including the margin positions. And yeah, I haven't contributed any more money. I've only contributed $2,081.16 so far. Obviously, these were the numbers yesterday, if I logged them correctly. This number was actually probably inaccurate, but whatever. And then our margin used, that's currently up to date. And then, yeah, these are the total dividends that I've received, for those of you who are new, for the whole month of October as of today. And that's $196.66. You can kind of see a breakdown of that right here, but I just kind of deleted it so that way I can log this properly. But for those of you who are new, I've been basically logging my portfolio's positions and net account value and everything since I started this account. And that was at August 19, 2025. We started with $678.67. And as you can see, this is where we are at today. Now, hopping into the dividend sheet, let me zoom in for those who are on their phones. This is where we are currently sitting. And for those of you who are new, I basically like to only take a look at the market return and total return. That helps me gauge where we are at with these positions. Now, something to note with this sheet, it's not going to be pulling the after hours or the pre-market share amounts. So that's why this might be slightly inaccurate, at least until the market open at 9:30 a.m. Eastern time. But we are currently looking good. So for our total return, we are at 5.81%. For HOW, 0.47% positive for WPAY, 0.90% for NVDW. But for our market return, we are up 1.53% for HOW. We are down 2.09% for WPAY, and we are down 0.07% for NVDW. So we're actually looking good. Now, hopping over here real quick, and I'm just sharing this for those of you who are new. You can basically skip past this if you're not, but basically, yes, I've been investing since August, and I'll share with you where the dividends are labeled for that. But for these positions, this is how long I've basically been holding it. I've actually invested into WPAY since the very beginning that it launched, and that's how much I've gotten in total in dividends paid out since inception. For HOW, I've gotten $87.75. WPAY $95.36, and NVDW $13.13 so far. Now, for the total month of October, like I mentioned, we have that $196.66. Now, for all my sold positions, I basically put the dividends that were paid out here to the side. That way I can accurately track it for my portfolio. But for the entire year so far, we are at $230.83. Now, real quick, I wanted to hop into X. If you guys are not following me on X, feel free to give me a follow on there. But basically, I've been posting updates for my portfolio and etc. But yeah, with that, I kind of wanted to get into a little bit of news. So yeah, make sure to subscribe to me on X, and let's hop into the news. So first things first, I wanted to talk about WPAY's newest ETFs. I mentioned this the other day in one of my other videos, but basically they've officially released these 4 ETFs. So they released the ARM Holdings ETF, which is ARMW, Alibaba's ETF, which is BABW, Costco's ETF, which is COSW, and Uber's ETF, which is UBEW. Okay. And it says here, according to Beat the Bots on X, it says it's official. The WPAY basket is about to grow. RoundHill launched 4 new weekly pay ETFs today. And then it says the suite now spans 19 single stock income funds from Apple to Uber. They will be added to WPAY at the next scheduled rebalance. If I remember correctly, usually they rebalance at the end of every single month or at the beginning of the new month. But that's kind of what I remember. Don't hold me to that. And yeah, that's just something to keep in mind. Moving on next. I saw this interesting post. I really like following this guy by the name of Richie B on X. His username is Wannabe Fresh, which is kind of cool. But he says, why I'm bullish on RoundHill, part 2. Now, I'm not going to go into part 1. I'm just going to read part 2. He says HOOW versus HOOD. So HOW is RoundHill's single stock ETF, and it correlates with HOOD, which is Robinhood stock. And it says the total returns since launch June 18, 2025. HOOW, the launch price on June 18, 2025 was $50.50. The current price, $69 as of when he posted this. The price appreciation, 69 minus $50.50 equals $18.50 gain. The percentage gain from price. He divided the gain, the price appreciation gain, divides it by the launch price of $50.50, which equals 36.6%. The dividends he's received or that were paid out since then are $23.36. And the percentage from dividends equals 23.36, which is the dividends received, divided by the launch price of $50.50, which equals 46.3%. And the total return is the 36.6% plus the 46.3%, which equals 82.9%. Versus if you look at Robinhood stock HOOD, the price as of June 18, 2025 was $78.34. The current price is $134.50. So for price appreciation, you have $134.50 minus $78.34, which equals a $56.16 gain. And the 56.16% gain divided by the price as of June 18th, which is $78.34, equals 71.7%. Now, Robinhood doesn't pay any dividends, so that's $0. So basically, the total return would be 71.7%. Now, both are really good at the end of the day. But as you can see, that 82.9%, because you're getting the dividends, because you're getting the price appreciation, that's phenomenal. And this is what he says. He says, despite HOOD's stronger price move, HOOW's total return is 11.2%, higher than the underlying, which means you're capturing HOOD's upside while also getting paid weekly while doing it. This isn't even including if you dripped. The usual just buy the underlying argument doesn't apply here. RoundHill swap-based structure changes the game, as I mentioned in my earlier post. For those fully port in high-yield ETFs, this is a great way to capture growth you might be missing from the underlying stocks while still earning consistent income. That's very interesting to see. And then last, but definitely not least, this is super interesting. This is from High Yield Hustle. He said this gap will only widen, and this is for my WPAY and ULTY fans. So yeah, he basically took this as of October 23rd, which is yesterday, 2025, and it shows the total return percentage. So WPAY is 9.96% up, and ULTY is only 2.05% for this time. And so he's saying that the gap is only going to widen. Look at that gap, guys. So yeah, I don't know. If you're still in ULTY, you might need to do some reflecting. Okay, but yeah, that's it for the news there. So thank you guys so much for coming on watching this video today. I know it's not too much, but I wanted to keep this video pretty straightforward and simple. Again, if you are new here, make sure to smash that subscribe button as well as that like button. And I really appreciate everybody who's taken time to watch these portfolio updates that I've been doing. Yeah, if you guys have any comments, questions, feedback, suggestions, or ETFs that you want me to take a look at, please comment down below. I'm very curious. And what are you guys currently investing into? What are you guys currently looking into? Comment it down. And yeah, with that being said, until next time, guys, peace.